Hello and welcome to the Weekend Investing Daily Byte of 6th of August and a complete dead cat bounce today. The market opened a couple of percentage points up, percent and a half, in fact, on the back of Nikkei index jumping 11% right at the start of the morning. So there was a huge uh, bounce in Japan, and that caused a huge bounce in US futures, and that caused a huge bounce in Gift Nifty futures, and which caused a bounce at the open for Nifty, but Nifty could not sustain it and went down, closed the gap, in fact, closed lower than yesterday. So the hopes that it was a one-day fall and it'll recover quickly have been dashed, and now the wait is how long will this consolidation take place. So is this a beginning of a downward trend, which is, let's put it this way. I mean, this was going to happen sooner or later, some sort of a time based or even a percentage drop basis correction. It has possibly started now. It was expected at the time of elections, then it was expected at the time of the budget. Maybe the stars have aligned for some downward movement now, or even some folks, if one were to believe, I mean, this is only a temporarily few days of a downtrend and then we go back up again. So I don't know what's going to happen because there is no way for me to predict what is going to happen. But what we can learn from the history is how markets have panned out after each such episode. And we'll take a look at that in today's second segment of the video. So where is the market headed? So market made an attempt to go higher than yesterday. It was a good attempt in the morning. The gap is huge above yesterday's high, and you know a reversal of sorts would have emerged if this support did not could hold, but it has not held. We've now closed at almost a month and a half lows. Um, so now this two sessions of down move and the second session with a gap up and still a down move is sort of confirming that we are going to be down for some time. Whether it will be for few days, few weeks, few months, I don't know. But of course, I mean, one is hoping that it won't be too long. But even if it starts to come down, I think it is all right because uh, a lot of times stronger, longer bull runs are made out of good corrections. So that's what one would like to believe. But if it is a very deepish kind of a downtrend that has started for the next 6 months till Trump comes in and shakes up the world again, then maybe there is a long, painful journey ahead for which also we need to be prepared mentally. Nifty Junior breaking down as Nifty has. So this is now a breakdown below the election day highs, minus 0.92%. Certainly an impactful down move today. Can't deny that fact. On the mid caps, we are just at the support. Mid caps, in fact, not dropping as much, 0.6% only down. So that is still giving some hope to the broader market that the mid caps and the small caps are not yet, collapsing. Small caps also down only 0.39% today, but this is not the end of it. So there could be, follow up action on the downside for more deeper gashes. So immediately on a big fall, a dead cat bounce is expected, and that's exactly what happened today. Nifty Bank did not even clear yesterday's high and closed at a new recent low. So Bank Nifty also weak, minus 0.69%. Heat map, you have some greens with FMCG positive, you had IT stocks positive, you had Reliance make some gains, JSW make some gains, but other than that, most of it was red. State Bank of India, HDFC Bank, State Bank Life, HDFC Life, Bharti Airtel, all down, but not as much as one would could have expected from yesterday. But of course, the gains at the start of the day were all wiped out. So PSUs were more hit today. So PFC, REC, IRFC, IOC, HAL, BEL all going down. Stocks like VBL, Marico, Zomato, all taking some hit today. Torrent Pharma, DMart, were some of the names that stood out on the green. In terms of sectoral trends, PSU banks were the worst hit, 1.3%, public sector enterprise stocks, 1.2%. So mostly what happens whenever a market is falling is the place where people will have the most gains will, in the first leg down, will get hit the most. And that's what exactly is happening. The PSU banks and public sector enterprise probably had the most gains recently, and they are down the most. Also, real estate, which had most gains, which had almost sort of oversold till yesterday, actually saw some bounce at 0.8%. IT also seeing some 0.5% bounce. So no place to hide really. But it kind of consolidated there the entire market near yesterday's close. PSU banks, as you can see, are now near the election day low close. So not really a very good sign. This looks like 4 or 5 months of distribution, and if it breaks down, then then some hell will break loose on the downside. Public sector enterprise stocks also has lost the election day high, which is a psychological point for most charts, and is now very near the the previous lows that we've hit near 10,900 or so. So this is also looking a bit precarious. In terms of stocks, Symphony was one stock which really stood out, clocked 18.8%. So minus the last two sessions, you can see the stock didn't fall at all. So relative strength is something that you should look out for in stocks. That those stocks are inherently strong and they may buck the downtrend in the market. So now the uh, topic for the day, whether this is a beginning of a uh, downtrend. So I'm going to show you some examples of, like, this is a hourly, sorry, 15-minute chart, and you can see that yesterday's collapse, in the second half of the day, they was trying to do some recovery here, some covering here, and today morning was sort of a dead cat bounce, which technically, when you say dead cat bounce, it means that sort of the cat was already dead, but then it bounced. So in market terms, the market looks dead, but then out of nowhere, there's a bounce, and then it goes dead again. So this is exactly what sort of has happened today, that it was down, 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 and then suddenly a bounce, and then it died again. It may go up. That is another leg that may start, but as of now, it is weak. It is lower than yesterday, and it is tantalizingly close at previous lows. So if you see past moves also, there will be many such situations where the markets are continuing down, and then there will be suddenly a largest bounce of 10-20%, and then go down again. So even on a slightly longer term basis, you will see these dead cat bounces that happen. Now, if like right now, for instance, or let's say in 2022, uh, if it breaks previous low, then recovery becomes nullified, resulting in a dead countdown scenario. So this scenario that you're seeing, that market was going down and then it made a new low, but then there was a huge bounce out of nowhere. So this kind of bounce also can happen in bear markets, and then ultimately it collapsed down to a new low. So this is common. It usually traps a lot of traders on the wrong foot. When you try to start buying aggressively on each bounce, but actually the market is just bounce. It's like a tennis ball. When you throw a tennis ball outside a, let's say, a 10-story building, it'll go down, then bounce till fourth floor, then bounce till second floor, then bounce till first floor, and gradually die down. So these kind of bounces happen in the stock markets also, and you have to look out for which bounce can be a reversal and which bounce is just a bounce. So on a very, very short term basis, and this is just my thesis, and it doesn't apply 100% of the times, unless we are at least at a 2-day high, uh, there is no confidence in the market for me. I mean, for instance, let's say market was falling here, so until a 2-day high was crossed, I would not be confident about any rise. So similarly, you can see, market is falling here in election day, and then post the 2 days of bounce, then 2-day high has been taken out, and then the rally may start. So for now, 2-day high as is at 24,400. That will be the first sign that a potential upswing is even possible. Before that, I mean, I would not feel very confident about an upswing. Uh, so that's very sort of a rough thumb rule to use, especially for swing trader kind of investing also. You should look out for 2 days of bounce at least where it happens. And then on a longer term basis, you need to see where the highs and the lows are getting made. So if there's a sequence of lower highs, lower lows, lower high, lower low, then this sequence is happening. And only when you hit a new high is that a potential of a change of trend happens, and then you have a higher low and a higher high after that. So you have to see this in terms of longer time frames, how this works out. Is that a break of previous all-time high is also a great sign that a new trend may be forming, and then you need to look out for if you have a higher low and a higher high post that. So all these are rough estimates of how the markets may swing around. For instance, in 2022, you had markets just doing like a sideways from October 21 till about June, July of 23. So almost 18 months we had that choppiness where you're making lower lows, and then one higher high, but then you had a double bottom here, and then the breakout which went upswing. So you need to see where the market is consolidating. Maybe the market will consolidate somewhere near here, or maybe it may go down. But on a longer term basis, right now we are structurally, there is no problem at all. So, like till we come down to, let's say, 22,000, 700, wherever this bottom of the channel is, I think it's a natural sort of downswing. So just like you had, other times you have a swing down, you may have a swing down, and this will also catch up to maybe 22,900, 23,000. Worst case scenario I'm seeing right now. But in case that channel also gets broken, then of course you will have more trouble coming through. But for all practical purposes, the low that the election day made, 21,300, is the sacrosanct sort of acid test of the market right now. And we are far away from that. We are 2,700 points. So in case, just in case everything, all hell breaks loose and we come to that point, that will be the point of real support. Of course, if that breaks, then the story is over for a reasonably long time. So the question to be asked is, did you panic and exit the markets, or did you consolidate your position? Did you not bother about doing anything? Uh, Knowing and writing down how you reacted to each market move is very important. So in case you are reacting, you are panicking, do write down these dates that market did this and I did this. And when you will read your journal after 6 months, 1 year, 2 years, 3 years, you will realize how, if you were making any mistakes, and how you can improve on your approach towards the market. So for instance, if you ask me, I'm the least bothered in terms of where each day the market is going, as long as it is not breaching where the exits are, it is not breaching any major levels. It is practically noise. If it can build this up in the next couple of weeks, what will be lost? Nothing. But if you were panicking and selling off your positions against where they should have been sold. See, one thing is that market is dropping and everybody is losing, and you also lose, so that's fine, right? But if market is doing some noise and you panic and you do something which you were not supposed to do, that is the problem that you need to address. So be very firm in what your strategy is. In case you're following some strategy, then just follow that strategy. Don't panic. I know a lot of you are first timers to the market or may not have had experience of deep falls, but believe me, this current fall is virtually scratching the surface of a normal fall. So really nothing has happened yet. So don't feel distressed or panicked. And even if markets have to do a 2008 again, I'm saying even if where Nifty dropped 75%, where mid caps and small caps also dropped 70%. I'm saying even if that happens, I'm saying what 0.01% if that happens, how did we do from 2008 till 2024? That should give you confidence that regardless of what happens in the next 5 years, 10 years, we will make enormous money. So don't worry about all that. Some things that are not in your control should not be worried about. Worry about what is in your control, how you will behave, how you will react. That is what you should be not worried about, but you should be able to control it. But that requires experience of several falls, and it's just like you fall down several times and then you say, okay, I know if I fall down, I'll bruise myself. but heavens are not going to fall. But when the first time you fall and you see blood, you feel like the world is ending today. So that is the kind of difference between a mature investor and maybe a new investor. So I want all of you to be mature investors and embrace the movements of the market, because the market is like that. Unless the market falls, it will not build a base for the next rise, and you should be ready for that. Thank you so much. Send me your comments on what are your internal feelings. Are you feeling fearful? Are you feeling confident? In the comments, and I'll love to interact with you there. Thanks. Bye.